So, how did I make $1,480 with 8 cents trading Apple call options? So, looking at Apple, so I got into Apple on 11/26. 11/26. Let's see, on the 30-minute time chart. 11/26. On yesterday's chart, 11. So this candle right here. So basically what I did was I played Apple call options. I played call options on Apple as soon as it landed on the 200-day moving average, and then 12/23 I bought more call options. So 12/23, which is this candle right here. So basically after this previous candle reached 198, I try to aim to get a little bit of more Apple call options as soon as if it could reach that number of 198. And then at 13:43 of today, 13:43, so basically I bought call options here as soon as it gained this support level around 197. I bought more Apple call options, and then at 15:52 I sold out the position, making a gain of $1,480 with 8 cents. So that's how this trade went. This trade was pretty, it wasn't easy, I guess, I don't know, but basically this is how there's two ways you can manage your risk tolerance level. I keep on saying that you need to master your risk tolerance level, and so I'm going to give you two ways on how you could do that. So step one, right? So number one, let's say, for example, let's look at today's chart of Apple, right? So let's say you bought Apple put options. Let's say you bought Apple put options as soon as it approached the 9-day moving average, right? What would be your next step? So when do you know when to sell? So basically you could pay attention to your percentage where it says 9.04%. Basically try to aim for whatever your percentage target is. So if your percentage target is reaching a 5%, 10%, 15%, 20% gainer, etc., try to be reasonable. Try to be reasonable with yourself, knowing that that is realistic of happening throughout that day if you're day trading. Now, if you're swing trading, you can, obviously you can be a little bit more optimistic and try to reach for higher percentage targets, because, if you're swing trading, it's most likely that in a couple days anything could happen. So basically, if your game plan is to aim for a 30, 40, 50% gainer, okay, by all means go ahead, try to aim for that percentage target. And so the second way that you could go about it is that you could also do this. So let's see. The second way would be using the moving averages. So if you guys want to add these moving averages to your charts, you can add the 9, 20, 50, 180, and 200-day moving average. And basically what you'll do is that you'll use these moving averages as your entry points and as your exit points. So what I mean by that is you'll use the moving averages. You'll decide to either play calls or puts on that particular stock that you're trading options on. So let's say, for example, okay, my plan with trading Apple today would be playing put options as soon as it approaches the 9-day moving average, wait for a rejection, and then sell out the position as soon as it reaches these levels, pre-market levels of 198. So I wouldn't count this long wick candle on the 830 candle where it says 197.10. I would just look at it like this way. So right now it says So I'm not sure if you guys can see it, but like it says 198. That's like the support level. So basically, after waiting for the rejection of the 9-day moving average, I would try to see and wait if it can approach that pre-market level of 198. So once I see that, okay, I'm seeing that Apple did get rejected by the 9-day moving average on the 10 candle. What's my next move? I'm going to try to aim for the pre-market support level and sell out the position as soon as it reaches that support level of those pre-market levels of 198. That way I can exit with I can exit out the greens. And that way I know that, okay, I'm not second guessing myself, knowing that, I could have taken the win there, but then all of a sudden Apple made a sudden U-turn and I lost, all my profits when I could have sold out the position for a gain. So basically that's another way that you could, manage your risk tolerance level. Now the third way would be like, let's see. Okay, let's say throughout the day, right, you bought Apple put options here as soon as it approaches the 9-day moving average, and then all of a sudden it approaches. Let's say you bought put options on Apple. As soon as it approaches the 9-day moving average, it breaks through it, and your next buying opportunity would be when it approaches the 20-day moving average, and then all of a sudden it breaks the 20-day moving average and it approaches the 50-day moving average. If you're seeing that it's constantly breaking above those moving averages, you have to know that eventually you're going to have to cut your losses. You're going to have to take the loss. And so you got to keep in mind and be like, okay, well, if that's happening, I'm going to try to aim for taking a 10% loss or a 5% loss or a 15% loss, etc. You have to know when it's time. You have to know that if that particular stock is breaking those moving averages, it's time to sell. It's time to cut your losses. That way you're not putting more money into the trade, and then all of a sudden that particular stock isn't going according to your plan. Okay, you know that you cut your losses early. You didn't lose a lot of money, and now what you can do is you can move on to the next trade and try to be a little bit more observant of the market and look for other opportunities. So that's two ways that you could go about by managing your risk tolerance when it comes to trading options. So that's pretty much it. And this is not financial advice. As always, take care. And if you guys want to sign up with my Webull link, sign up with my Webull link located in the description below or in my IG bio. And once you deposit $100 or more into your brokerage account, Webull will give you a possible chance of getting a cash bonus. So that's pretty much it. As always, take care and bye.